again. So actually I recorded many videos in one time because it's difficult for me to make a few videos in the next days. So I will pre-upload them for you to watch. I wanted to talk to you with a matter of it's a matter of, I think, carefulness, because you need to have a good risk management. So, you know, normally when you are going to trade, normally you are going to take a stop loss and perhaps a 1 to 3 or 1 to 2 or 1 to 1 or 1 to 4 or higher position that you risk, in this case $100 and making 300, okay? But with my strategy, I explained it for you really carefully, and you heard that I don't work with this stop losses like normally. So with this risk reward ratio, I don't work with it. So I work with fixed numbers for a lot size. Okay, so let's say you have a 100k account, then I would take, when I am riding a trend, so trend riding. So now we have a problem because I think the gold is coming really far, but okay, so you are going to riding this trend. To make this a little bit deeper, so I have more space in here to teach you. Okay, so when you tried when you ride a trend, then you go in with the thinking that the trend will go high. Okay, so first of all, you would think you can go in with a really high lot size because you are really right and the trend continues and so on. But I don't suggest to do this because you can always have a drawdown. So you need to be careful with your money, because you know there are untouched candles, and whenever a trend is going in one direction, it comes back to hunt the stop loss. So you need to protect your money in this phases of the trend. So let's say we are having this uptrend, and you are going here in with a position, and you want to go here in with another position. So normally you would do it like this here, that you are having a stop loss and a target, perhaps 1, 2, 3, okay? That's what you are normally doing when you learned it from a trader or something. But in this case, I am going in a little bit different. So like I cannot say how much the stop loss need to be, because perhaps here is an untouched candle, and this this trend will go here before it goes up. Okay, so in this case I need space to cover these losses and to buy in again at another point. Okay, so buy, you know what I mean. So for me, I am doing this Really? Really, really. So for me, what I am doing here is, let's say I have a 100K account, and I was using with my challenge accounts a 0.5 lot with gold. Okay, so this is what I have used to go in here and here. But the problem is now that I am really experienced and I know this strategy in and out, and I know when I shouldn't risk so much and when I take a lower lot or something. Okay, so for you to start the strategy, I would want you to go with lower lots. So perhaps you take a 0.25 position to secure some room for improvement. Okay, and I would say that's equivalent to a, like, I am going to look what this would be in Forex. So I think this would be a 2 lot with Forex and perhaps a 5 lot if you trade, for example, Euro USD. And I always wanted to know, always wanted you to know that you can start lower. So if you are in the beginning, then perhaps you take 2.5 and 1 lot with Forex, and then you take perhaps 0.1 and 0.05 with gold to secure that your money is safe. Okay, and many people are going to start with a personal account, perhaps they are trading for example $1,000 account, and then you need to scale this up really, really slowly. So I wouldn't take then more than 0.01 on gold and 0.1 with Forex. Okay, if you are not experienced. So when I am going to trade gold in the live trading session with you, you will see me that I will be doing a higher lot size. So I think I will go with a 1.1 with gold or a 0.05, and because I am absolutely experienced with this. And what I am doing then, so what's me helping to really, really save my drawdown in the risk management is, so I have had a 50K live account with funding talent. Okay, this was my first live account, and I made out of this live account over a 10K profits. And how do I do that? I was trading with 0.2 lots on gold. Okay, and when I make profits, so I had the first $600 profits, then I was going in and take a 0.25 position. And then when I was at a point where I had 2,000 profits, like I don't use the drawdown of the prop firm, I go in and up to 0.4 lot positions. Okay, so I always increase the lots with my profits. So in this case, you are safe with your drawdown. You can hold your positions a little bit longer if you be sure that this trade come back, because you know that it's a liquidity grab, or you see that the RSI and stochastic is at a point where it will change and you want to hold it. So in this case, when you start small and go in bigger, then you can make bigger profits, and then it's no problem that you are going in with a 0.5 or 0.75 and a 1 lot on gold. When you are sitting on 5, 6, 7K profits, then you can go in with higher size trades. Okay, so this is the scaling. You scale it up, but you need to take this carefully, because it's not an option to lose a funded live account. It's not an option to lose many profits from your personal account. So let's say you are starting out with a $1,000 personal account, and in the first scenario you go in with a 1 lot trade on gold, and then it runs against you and you get scared and you will close it at loss of 500. So you have to make so many profits to take it back with a mini lot, with a small lot. So you need so much time to cover this one loss, that it's better to go in with really small positions. Okay, and then when you have a big profit, you can scale up. And this is my suggestion for you. So you have seen in the updated strategy free class video when you should go out of a trade. So let's see this in the charts. I will show you this here. Let's say, okay, let's say you are here, and this is actually gold, and gold is trending like crazy. Okay, so you are here in a ranging phase, and then it go back into the trend, and you are going to think, oh yeah, that's here. Let's say you would go here in with a sell. Okay, because you think that we are here in a downtrend direction, but you don't see that this here was only the liquidity grab of this candle. Okay, you didn't see this here, so you didn't have seen this here. You don't looked at this, and you are thinking, okay, we will be going to have a huge sell now. We are going down, the trend is over. So then you have a sell here, perhaps you would take another sell here, and you didn't close here, so you are already in a sell, and then it goes against you to the uptrend again. Okay, and then you would take another sell and another sell, and another sell and another sell, and you see that this now blew your account because you trade against the trend. And that is the problem with the ranging market. When you don't close at a safe position, you can come in this and you lose all the profits from before, or when you have no profits, then you would lose your own money from the pocket or the funded account, and that is something you need to avoid. So you need to trade this strategy safe, because you see it doesn't come back. We come in a ranging market, it comes a little bit to the downside, a little bit, but actually what happened now is it's going trending again, and you would never go out of this trade, because you always think, let's take the 1 hour instead. Let's see. We are here. Here was this. So you were here and thought, hey, this is the time where the sell is going down, and then this huge trend is coming, and you see that it's never coming back to you. So you never can close in profit. So that's the thing why I prefer to ride the trend, okay? And why I prefer to take small positions, have many room between those positions, and yeah, it's literally the safest way possible to trade this strategy. Like I explained this to you in the free course, okay? This is really, really important to know for you, because many people are failing with this strategy because they are going to take too high lots. They are going to take too many positions. They are going to think in her mind that they will be right and the trend will change, but sometimes there is a really strong trend and then there is no change coming, so you need to protect yourself. And when you're thinking from a funded account perspective, normally normally with your own trading account, and you have let's say you have $10,000 in this trading account, okay? That's your own account. Then you have more room to lose money, because you can, if you want to, lose all this $10,000. But when you have a funded account, and this is an account of $10,000, then you always be allowed to lose on one day 5% and overall 10%. That's most of the funded program drawdown rules. So 5% were 500 and 10% were 1,000. And if you risk those 5% in one day, you have only 2 days to lose your 1,000. So your drawdown is gone in 2 days if you risk too much. So you can't risk this 10,000. You always need to take care of your drawdown. And so we are doing this experiment with the live trading with 1,000, because you see then it's possible to trade your own money, like the drawdown rules, they are on our accounts, okay? So in my actual live account from Funding Talent, it's a little under 100K. So I have 100K live account, and I have this rules that I have 10K daily loss, and it's an over loss too. So I could lose 10K before my account get violated, okay? But you don't never want to touch so much balance from the funding company, because you need to scalp it back. And that's when you are in a need to scalp money because you are in a drawdown, it's most likely that you make false decisions, okay? So whenever you want to place stop losses in this strategy, let's go back to the 1 minute. Then in my perspective, let's see. Okay, so let's say you are going here in with a, let's say you are going here in with a buy position. Okay, so you have here a buy position, and you expect that the move go in the other direction. So you think that it will move to the upside. And if this will not happen, you have the chance that it is only a liquidity grab here. And after this, I really think, let's see it here. So I really think when you are here, come on. I have a little bit problems today. Okay, so I really think, I need to make it in another way. I think when you come back here, you could easily take a stop loss here, okay? But it's, for me, it's imagine stop loss, because I want to see what this is going to do. So because you can grab this here too, this candle, or what possibly can be this candle here. And then when you go in with a really lower lot size, you can hold this drawdown to this position and go in with another position. And when you then hold the drawdown to this one and you go with another one and it goes to the upside, all positions will be really quick in profit and the drawdown is away. And if you then be insecure and are thinking, okay, I don't want to hold this drawdown anymore because it's going into the other direction, and literally there are candles like this one, perhaps you would say, okay, this candle here is a point, or let's say this one. So here, all these things you need to have in mind, because if you don't want to hold it so long, then you can go out the first time, or you can take a stop loss here or here or here. But it depends on how much, how high the lot size is, how much drawdown you can handle, and how much profits or money you are willing to lose. Okay, so this strategy is really open, so you need to practice it to tell where your stop loss needs to sit when you feel comfortable with the stop loss, when you would close the trades. That's something I can't tell you from my perspective. Okay, for me, I am really a little bit, I am literally someone who, I look on the 15-minute, for example, and for me it's really safe that this trend will come down really hard. When it comes down, then it comes down really hard from this point. But on this position here, I literally would have waited to the point where we are on the 1 minute. I personally would close like in between these two, okay? Because we are then under the 200 EMA, and when I see that there is no wick into the 200 EMA and it's break through all this possible stop loss hunting positions, then I would break out. I think I would break it out here really, really quick then, because you never know if it's come back. So I would quit here. But that's something you need to consider, how much you want to risk your money, how much money you are going in with the trade. If you go in with a high lot trade, then normally you would close it like here, because you have no room to hold it. So you need to consider how much you can take on the instrument. So what you need to do is take the trades on a demo account and look what the strategy is about, how you come up with a strategy, and then when you have understand the strategy, what is your drawdown like, okay? So that is something you need to see for yourself. I can't help you with this. I can only tell you that most of the time when the 200 EMA is broken and there is no wick inside the 200 EMA, the trend is changing. And you see it here when the parallel lines are forming in the other direction, the trend is possibly changing too. So we had now 3 times where this can't come over this high position. So now it's actually a real moment where gold is trending down. So actually we think we go down and take some of the stop loss outs, and then it can trend back again. But it's something you need to consider for yourself. I wanted to give you this insight. It's a little long video, but risk management is key. If you don't understand risk management, don't trade. If you understand it, then trade, then you are safe. But if you don't want to be safe at trading, this strategy is not for you. If you only want to risk capital and go in with 50 lot, 100 lot and so on, then you are really blown out so fast, and that's nothing you want to mention to that happened to you. That is nothing I wish you to happen. So you see here, actually this is a point. We are actually in the live point. So we have stop losses here. We have this untouched candle. This is the next untouched candle here. So when this gets broken, then it's literally come to this candles here. This is the next. This are literally the real next untouched candles. And here is a little one. I really don't know if this is too little, but we have this candle here too. And yeah, you need to know how long you want to stay in a opposite market. That's something nobody can tell you, and you need to find it for yourself. Hopefully this helps, and hopefully you are going to rock this strategy and succeed with it, because I am really happy that I can be your mentor in this thing, that you are going to watch my videos. This is really, really, this makes me so happy, and thank you so much for this, and see you soon. Take care. Goodbye.